Hey everyone, thanks for joining us. My name is Brett Kenwell. I'm the US investment analyst at eToro, and today we're here to talk about the state of the crypto market. It's February, we're already a month into the year, and it's been pretty busy. There's a lot of things going on, not just in crypto, but in markets in general. And so we thought today could be a good time to sit down, talk about what's happened, and more importantly, talk about some of the things that could happen as the year unfolds. So after a quick disclosure slide, let's go ahead and jump into what we're here to present today. A little bit of our agenda. We want to talk about where Bitcoin's been and where it's going to go. That includes a quick look at the charts, a little technical work. We have a little interactive portion lined up for later in the presentation, but we also want to look at some of the bigger picture catalysts for Bitcoin this year. We want to talk about some of the risks for Bitcoin as well. But at the end of the day, we want to tie it together and look at what investors can do to help mitigate some of that risk and help them navigate through 2025. So to touch on where Bitcoin's been, a lot of people think of 2024 as just the move to 100,000 when Bitcoin rallied out of the election and hit that key figure, towards the end of the year. That's not all 2024 was, though. At the start of the year, 13 months ago in January, the SEC approved a handful of Bitcoin ETFs, which was a big deal. And it actually was a huge catalyst for the price of Bitcoin. But a lot of people kind of forgot about how much it really moved in that span, because when you look at Bitcoin, it's really easy to just think about the move to the key 100K mark, but it actually moved up to the 70s in March and then traded sideways for 6 to 7 months. That's known as consolidation, but it's very healthy technical action. And when you really look at the charts, where you kind of break down some of the moves, you see that Bitcoin is actually up 60% going into the election. And before that, it was up 150% in 2023. So Bitcoin's really working off a strong base and a strong technical perspective. And we're going to touch on that in a minute, but just a little bit of a recap to consider where we've been to where we're going now. When we look at the catalyst, the big 800-pound elephant, the 800-pound whatever mammal you want it to be, one in the room is DC. We have a new incoming administration they have a much different stance and much different perspective towards crypto and regulations in general than the prior administration. With that can come increased risks, but the reality is for asset prices, deregulation tends to be a positive. To see the administration have such a pro-crypto stance, that stands to be a big benefit for Bitcoin and for other underlying altcoins that also has some risk tied to it. And we'll touch on that again in a minute. But for the moment, a lot of people are looking at policy changes as a positive for Bitcoin. When we look at the charts, again, very strong technical backdrop. We're in a strong bull market now compared to the historical pullbacks. The dips right now are more shallow, which tends to be supportive of price. And what we want to see is an eventual move higher and let those technicals move back up to the upside and make new highs. Now, we don't know that it will do that, but that's what investors are hoping for. And lastly, we have the halving cycle effect, which is still underway and should carry on through a bulk of this year. And if you don't know what that is, we will touch on that again in a couple slides. So now I want to go to a technical breakdown of Bitcoin, play with a little bit of the interactive charts on eToro's platform, and kind of dissect what we're seeing in the market right now. So right here, we're on the eToro's Pro Chart feature. We're on the desktop, so desktop users can go into their chart settings, jump over to Pro Charts. We're under the Bitcoin symbol, the BTC. These charts are powered by TradingView, so if they seem familiar, that might be one reason why. If they also seem familiar, it might be because you've seen this chart probably a handful of times. We've published this chart in our daily note called the Daily Breakdown. We send it every morning. And I know I've personally used this chart several times in talking about Bitcoin, waiting specifically in this consolidation phase, waiting for that next move to the upside. If you don't get in your email and you want it, feel free to message and reach out. Otherwise, you can also find it on eToro's social feed under the handle at eToroUS. Let's dive into the charts a little bit. And I guess we'll focus specifically on this consolidation phase since we were just sort of talking about it. But this here is a little illustration I made probably when we were kind of in this area chopping around, wondering if Bitcoin was going to break out, make new highs. It had such a strong price move in the first part of the year. This is the first part of 2024. You can really see that here. That's known in the technical world. This is a bull flag, this being kind of the flag pole, the rally part, and this being the actual flag. And what that is really just a definition of either sideways price action or sideways to a little bit lower price action. In Bitcoin's case, this was slightly lower, sideways to slightly lower action, but ultimately gave the move that investors wanted to see, which was that big breakout to the upside. And that's really what investors were looking for. That's what they were hoping for. Of course, that didn't mean they were going to get it, but in this case, that's what they got. And again, now we're starting to see this sideways price action for Bitcoin. And Consolidation, I think this is maybe the harder part for investors to remember or to kind of keep in mind, that consolidation is very, very healthy price action. It's exactly what you want to see because it gives an asset time to rest. I like to say rest and digest. It digests that big rally it just had and it gives it time to rest for the next move higher. Now, that again, it does not guarantee you will get the move higher, but it at least gives you a better chance, I think, of seeing the move you want to and seeing a resolution to the upside. And you can kind of see that in this last stretch in 2023 and 2024, where it had this long multi-month consolidation, but you also see it in other parts too. After that big Q4 move in Bitcoin, we saw a shorter consolidation, but still sideways price action. And again in 2023, if we kind of slide over and we see that scales readjust a little bit, but see this nice big move out of the 16,000 area, practically doubled, and then traded sideways for a number of months. So that's very good action. You want to see that type of digestion in something that moved this far, this fast. And make no mistake, this is a giant move. So from here moving forward, investors are looking for that ceiling that's in that 105 to 110 range to eventually break to the upside and let Bitcoin find its new price higher, whether that's in the 120s or possibly higher. We don't know, but that's what we're looking for. The flip side, the risk of the technical perspective is that the floor, which is down in the low 90s or right around 90,000, if this area gives way, that can open the door back up to the downside. And right now, we don't know where the downside limits really are. We know that the 50-week moving average has been supportive of this rally since it got started about 2 years ago. But we also know that this 50-week moving average is going to continue to trend higher because Bitcoin's price is significantly higher than it. So we know that that's going to move higher, and maybe we do see an eventual test of it, but it might not be the end of the world. So that's where investors have to be careful when they're applying the technicals to it. And now I want to talk a little bit about the halving cycle effect. So there's been this sort of anomaly, this sort of pattern recognition is a very big deal in technical investing, but it also has an effect when we're dealing with Bitcoin's halving cycle. You notice on this chart goes back about 10 years. It kind of covers the last several halving cycles. And you'll notice that 500 days before the halving cycle begins and roughly 500 days after is when Bitcoin tends to make a significant high or a significant low. The one in 2015 was a little early because these lows did continue to persist, but it wasn't significantly different. It wasn't like it made a low and a little bounce and then completely fell apart. But we do tend to see these markers around the 500-day mark. Now that, again, does not mean 500 days from the last halving in April 2024 will mark the absolute high in Bitcoin for the next several years. But it's worth knowing that this catalyst has been in effect for the last several halving cycles. For what it's worth, 500 days from the last one puts us somewhere around early September 2025. So at the very least, we have about 7 months to see how that plays out. And you never know. Bitcoin could break this cycle in a couple different ways, in good ways and bad ways. A good way to break the cycle would be to see it continue moving higher and rallying well past 500 days beyond the cycle. And it could disappoint in the way where we don't hit a high 500 days later. Maybe we languish around the current levels and it takes a year to move higher. You really don't know. But the benefit is knowing this and having in the back of your mind that this is a possible play for Bitcoin. So those are some of the catalysts for Bitcoin. What are some of the risks? Earlier, we talked about some of the catalysts specifically related to the incoming administration and how the White House can shape policy for crypto and how the incoming administration favors deregulation. But that can also be a risk, especially when it has to deal with the federal government. The government has a way of letting things sort of become deprioritized as other things come up in the international community, in the US, and the domestic world. So really, we don't know how these things are going to play out. We don't know how long it'll take for them to play out. When we're dealing with the government, timeliness is always a question that a lot of us have from the outside perspective. And unfortunately, we just don't know how some of these will work out. For now, I view these as a positive. I really do look at the incoming administration as a positive for the crypto space, but we have to acknowledge that there are some risks with it because we simply don't know how it'll pan out. The same can be said when we're looking at general investor sentiment. Whether we like it or not, crypto assets trade similar to other risk assets, mainly stocks. We do notice that there's been sort of a decoupling of the correlation between the two. Now, that's a lot of fancy words, but it's basically saying that crypto and stocks have been trading less similar as time has gone on, which is a good thing. It shows that the space is maturing. It shows specifically that Bitcoin is starting to mature into its own asset and has its own qualities that drive its price both up and down. But we can't lie and deny the fact that if the stock markets were to have a large move lower, it would probably pull the crypto market down too. So we have to be aware of that we have to be cognizant of that fact and aware of those risks, that if other risk assets like stocks move lower, we have to anticipate that crypto will probably follow in its footsteps. And we also have to be aware of the general risks that come with the volatility of Bitcoin. And I'm actually going to jump back into the charts that we were in a few minutes ago and kind of highlight some of the volatility we see in this space. And I'm also going to highlight why that's not necessarily a bad thing, but it is a risk you need to be aware of. On our last demonstration, we were looking at a weekly chart of Bitcoin, but I want to zoom in a little bit closer and go with a daily. And we're back in the pro charts, which I think do a really good job of sort of highlighting a number of different features. And it really lets, if you're the most technical analyst savvy trader out there, or you're the least technical savvy trader out there, I think these charts have a little bit of everything for everyone, which is why I like them so much. You have abilities to add lines or trend lines. You can add some text or call outs. If you want to put I like to put little notes on there sometimes of, if Bitcoin breaks below 90,000, I like to have that there. It's also got some pretty advanced features, retracement features. It's got all sorts of Fibonacci stuff. But one of my favorite ones that I like to do, I like to just come down. It's in the projections group, but it's got this little price range. And that tells you how much a stock has moved either up or down. And it's kind of fun just to see quick measures of where an asset's been, where the market's been. And you can see already, this is just measuring in this last rally in December and January, the types of pullbacks that we can see in Bitcoin. We've seen an 18%, 17 to 18% correction and a 16% correction already. And it's hard to believe because Bitcoin's really been holding up quite well. If you're a long-term holder in Bitcoin, if you've been in this name even for 6 months, you're probably pretty happy with where it's gone. I know I've been pretty happy with where it's gone. So to see that type of volatility might kind of surprise some investors. And I think it's just a reminder of how much that this asset can move, and even without breaking down. When we look at 2024, when we talked about this big consolidation phase when it topped in March and then it kind of traded sideways to a little bit lower, we saw about a 33% correction. In 2023, we also saw another correction. I think it was 22% or so was its max pullback. But it's just a reminder that Bitcoin can have these big types of moves. There's another 20% move from December to early January. We saw a quick pullback in Bitcoin. So just a reminder that this can move very quickly in both directions, but it can also be an opportunity. And that brings us to rethinking risk. I want to start by saying, I know it's down on the down lower on the bullets where it says, understand and even embrace the volatility. What I mean by that is, if we know that Bitcoin has a tendency to move in price swings of 15 to 20%, maybe a bit outside of that at the moment, but when we know that that's a capability, just know that in the back of your mind, price that into how you want to approach the asset. If you're thinking about going all in or all out, maybe think of something in between. There's a lot of different ways investors can approach Bitcoin and volatile assets like this. Sometimes stocks or tech stocks can also show volatility that investors aren't necessarily expecting. They can consider things like dollar cost averaging or focusing on the long term. For instance, if you focus on the long term, if your time horizon for Bitcoin is 5 to 10 years or even possibly something longer than that, I don't know that looking at any one specific week or one specific month of action is within that plan. Dollar cost averaging, which we just touched on, but that can help investors sort of stay the course when Bitcoin has big rallies or when it has big pullbacks. Putting in a set amount of money over set periods of time, whether it's weekly, bi-weekly, monthly, little increments can really help smooth out where your cost basis is and help you kind of ride through the ups and the downs, because when you're dollar cost averaging, you're probably buying some after a big run and you're probably buying some after a bit of a pullback. And it really takes a lot of that emotional components out of the decision making when you do it that way. But understanding that risk, understanding some of the volatility, but being cognizant of the bigger picture, I think is the most key thing you can do with crypto, specifically with Bitcoin. For those who want to look outside of the actual coin, you can always consider utilizing the ETFs. Some of the ETFs even have options trading on it now. So if you want to utilize certain hedging strategies with those ETFs, that's always a possibility. There's a lot of different things as we start to see parts of the traditional finance space come into crypto and really shake up what we've come to know as the crypto space, what we've come to know as Bitcoin. There's also Ethereum ETFs. I feel like that's worth mentioning. But as we continue to see these traditional finance tools merged into the decentralized world, I think it creates a lot of positivity. I think that's a lot of good things. You have bringing new investors into the mix, you're bringing new accounts into the mix, and you start to see how more people involved in this space can be a positive.